Hey guys, Chart Stoppers back with another video. In this channel we take a look at different stocks and map out their key support and resistance areas on their chart. It's important to know these areas before you buy any stock, and it's also important to know what kind of a trend a stock is in before you buy into it. Support and resistance is one of the most important things you should know about a stock before you either buy into it or sell out of it. And also, if you're doing any day trading, swing trading, or options trading, you are definitely going to want to get familiar with support and resistance and this channel. And just to let you know, I'm not a financial expert. These videos are for educational purposes only, but I am here to point out key factors on the charts which do impact the price action of a stock. And I also provided a link in the description for Webull. You could use it to start an account and get 2 free stocks. And I also provided a link for Robinhood. You could use that to start an account and get 1 free stock. And just to let you know, we will be doing 3 videos per week on 3 different stocks. So if you have a recommendation for a video, leave a comment below and I will try to get to it. And don't forget to subscribe to the channel and have your notification button on so you don't miss out on any new content here. So let's get into the market today. Today is June 18th, 2021, and as you can see, the markets are all in the red today. S&P 500 is down over 1%. The Dow Jones is down over 1% also at 1.34%. It was actually down 1.5% earlier, but it did regain some of that. And the NASDAQ is almost down 1% also, so it's at 0.82%. So a pretty red day in the market today. Everything is red, as you can see down here. All the indices are red right now, pretty much here. A little bit of green in software and semiconductors, but pretty much everything else. Look at the banking sector here. It is getting crushed lately. And everything else is just red today. So there might be a rotation back into tech, right, as you can see right here with the bond yields going down. So just keep an eye out for that and plan your trades accordingly. So let's get into the stock I want to take a look at today. I wanted to go over Hyliion again. I've done a couple videos in the past on Hyliion. I will leave a link in the upper right hand corner. You should be seeing that now. And you could go back and look at those and see how I got my chart to where it is today. So right now, currently, Hyliion is trading at $12.01. It's down 2.67% at the time of this recording, which is the equivalent of about 33 cents on the day. In the past week, they are down a little over 2.5%. In the past month, however, this stock has been on a tear. It's up 32% in the past month. And in the past 3 months, it is still down a little over 10%, almost 11%. And in the past year, it is up almost 18%. So, a mixed bag with this stock. You could see, this thing started off as a SPAC at $10 here. And, after it merged with the SPAC, it shot all the way up to $58.66. And, you hit that all-time high on September 2nd of 2020. And, ever since it hit that all-time high, you could see it stayed up there for a little bit and about a month here. And, it tried to retest those highs, couldn't quite do it, and we dropped all the way down to $7.69, which, let me zoom in here, find the date for you. We hit that on May 13th of earlier this year, so about a month ago here, we hit a low of $7.69, coming from a high of $58.66. So if you bought in at the top of this stock, you lost a lot of money on the way down here. You could see the run up, it was during a time during COVID, and, a lot of people were just jumping into the hottest stocks that were happening. And you could see here, this thing formed a head and shoulders pattern. And we'll talk about that in a minute. But also what happened, with this stock, it's an electric trucking company. So they're going to be making electric trucks. And there was a thing that happened with Nikola. They made a video of a truck driving down a hill, but it came out later that that truck was not actually driving. It was just rolling down a hill. So with Nikola, their stock got hammered also after that. But, I think it was unfair what happened to Hyliion because of a different company and their, stuff that they made up and tried to put out there to the public. That should have been solely their company and their stock that got hammered for that. But Hyliion took the hit also because they're such a similar company to Nikola. All right. So, we saw this thing fall all the way down. And you can see, during the correction, this thing, let's find what happened here in the middle of February. Let me find it here. I mean, this thing was already beaten down, most of it during, all that before the correction. But, you see here during the correction that just happened in the NASDAQ, we were trading around $20 and we dropped, about 50% here, a little over 50%. And we dropped all the way down to 769 there. So if you want to take a look at this chart here, you could see the head and shoulders pattern did happen, and this is a perfect example of it on a daily chart. You don't see too many of these on a daily chart that come out perfect like this, but this is what happened here. You had a shoulder here on the way up, went up to all-time highs, and then shot back down almost as fast as it came up here and formed another shoulder on the right-hand side here, and then came all the way back down where it started from and even went lower than where it started from as a SPAC, lower than $10. Once this thing hit $10, you thought that would have been the bottom since it started at $10 as a SPAC, but it did drop more than that, okay? So, a lot of people lost money on this one, but it is starting to make a comeback, and we'll get into that right now. So as you can see here on my chart, I have this big red line. That is the downtrend that we have been in, since reaching these all-time highs. And you can see on the way up here, this thing just shot almost straight up, leaving gaps in between these candles on the way up. So, like I talk about a lot here is, when you see a stock going up like this, just shooting straight up and leaving all these gaps in between candles and not a lot of consolidation on the way up, you know that eventually it is going to come back down to fill those gaps in and consolidate in these areas that it did not consolidate on the way up. Okay, it's just a given, and it happens all the time here. So you shouldn't have been shocked if you were in this stock, when you saw it shooting straight up like this. You shouldn't have been shocked that it came back down to fill those gaps in and now consolidate in areas that it did not consolidate on the way up. You could see right here, right after it merged or it came out as a SPAC, it left a huge gap right here in between about, $10 to around, let's see here, $14. So it left like a $3 or $4 gap here. So you should have known, seeing that huge gap and then all these other huge gaps here, that it was eventually going to come back to this area and fill these gaps in and consolidate in those areas. So that's why we saw this head and shoulders pattern happen. And, it came all the way back down to where it started from to consolidate in those areas and fill those gaps in. Okay. So looking at our downtrend line here in the red, you could see it had a hard time breaking out of this downtrend. It was stuck in this downtrend for a while here. You can see going all the way back to October of last year is when this downtrend started. And it got stuck in that until just recently it broke out finally on, let's see here, May 18th. You could see it finally pushed above this downtrend, which was following our moving averages pretty closely here. It looked like our 21-day moving average was acting as resistance here, which is this bottom one or this middle one right here in the light blue between the green and the white line. This is my 8-day moving average in the white, 30-day moving average is in the green, and my 50-day moving average is in this dark blue right here. So you could see, it wasn't just the 21-day moving average, it was also the 50-day, and you know, the 8-day was even acting as resistance also on the way down. So, you know, all these moving averages just bunched together here when it came back down, and you could see they just acted as resistance for this stock, and it was unable to break out of this trend going to the downside until May 18th right here. Okay, so you could see it has finally broken out of there, and since it has, you could see we went, let's see here, what was the high? $8.96 right here before it broke out of the downtrend. So since it broke out of that downtrend, it went from around $9 to a high right here of about $13.50. So you had a pretty big run up after breaking out of that downtrend, and you could see I drew a new trend line here in the green that it has been following since it did make these lows right here of $7.69. Ever since it hit that point, it has been on this trend line ever since. So we will continue to follow this trend line up until it breaks out of there and falls to the downside. So it looks like it's, you know, got some strength behind it. It is trading above the 8-day moving average during this trend line. It just recently fell below there in the past couple days here, but it is trading above our 21-day moving average, our 30-day moving average in the green, and our 50-day moving average also. So it has recaptured all of those moving averages. The 200-day moving average is sitting up around $19.75. So we still have a ways to go before we can recapture that, but this will be moving down, and it should be able to, you know, come close or break through that soon. So I'll be watching that going forward. I'm just going to switch over to our weekly chart, see what we're looking at here. And it looks like on our weekly chart, you could see this 21-day moving average here in the light blue right here where my mouse or my arrow is. You could see that's been acting as resistance this whole time almost when it's been in this downtrend. You could see right here where it started in October of last year, and this 21-day moving average on the weekly chart has been acting as strong resistance. It has not been able to break that since October of last year. So once it fell below there, it has not been able to recover that 21-day moving average on this weekly chart. So that's going to be huge going forward. You could see to end out this week, we got stopped out again by this 21-day moving average, and it has fallen below there still. So I think next week will be huge for this stock to see if it's going to continue on this uptrend or fall to the downside here, because you could see next week it's going to have to either break that 21-day moving average and move to the upside to continue along this trend line here, or it's going to have to, you know, break out of this uptrend it's been on in this green line and move to the downside. So we're going to be watching next week very carefully. Monday should show us what it's going to do, Monday or Tuesday there, and you could see, you know, it's right on our trend line, and it opened up this week right at our 21-day moving average, even going above there the past 2 weeks, but only to fall short to close the week out. So that'll be very important next week. I'm going to switch over to our daily chart and show you one last thing, and that's going to be, let me zoom back out here, and that's going to be this gap right here between $22.25 and $23.86. You can see that's a very big gap that needs to be filled in right there. And, you know, we do have resistance right here at $15.25. So I will be looking for this gap to be filled in on the way back up. You know, once we can break through this resistance right here at $15.25, and also we will have to break through our 200-day moving average, which is sitting at $19.75. Another thing I wanted to point out is just as we had no consolidation on the way up here, and you could see, you know, like I said, things always seem to come back and consolidate when they didn't consolidate in areas, you know, on the way up. So we didn't see any real consolidation here on the way down either. So I'm thinking, you know, if we do come to this area, fill this gap in around $22, we will also have resistance at $27 and around 10 cents here. You can see we tried to break through that area before and could not do it. So I threw that up there as resistance. You know, once we get up to this area, I'm thinking, you know, we need to see more consolidation in this area right here. We did not see any consolidation. So if it does break back up to the upside and come back to these levels here eventually in the future, I'm not talking about, you know, in the near future. I'm thinking, you know, maybe in a year or two, couple years, once they get some real revenue behind them and start making sales with their trucks, you know, we could see some more consolidation in this area because we did not see that on the way up or the way down. So we would have to break through a lot of resistance points to get to this area right here. But, you know, we will, I'm thinking, eventually see that because we did not see it on the way up or down. So that's just something to look forward to if you are holding this stock. And I think there's better days to come with Hyliion here, okay? So that's just my video on Hyliion. If you guys liked it, make sure you hit that like button. Don't forget to subscribe to the channel and have your notifications on so you don't miss out on any new content. I want to thank you guys for watching, and we will see you next time on Chart Stoppers.